in 2018, I remember catching up, I had a board meeting, and, one of my sort of board members at the time said, look, we talked about raising capital because we'd raised capital sort of, 18 months beforehand. And now we're sort of talking about sort of raising our next round of capital. And one of our board members, who's also an advisor slash, basically raises a lot of money, said, look, what we'll do is, look, we'll help you with the raise. So, over the next sort of month to 2 months, we agreed to terms on what that would actually look like. And effectively, they were going to raise $1 million for us. And then by the end of the year, they're going to raise $1 million in the first half. And then the second half of the year, they're going to look to raise 5 million. So as a founder, naturally, I just sat there and thought, that's brilliant. My capital raising is taken care of because I've got a shareholder that's going to be driving it. They've already raised money previously to get into the company. And now this is the next stage of the actual capital raising. So, I didn't really think too much. I went back to work on building the business. And effectively, I remember it was about, after a couple months went by, I sort of, I spoke to one or two investors. After a couple months went by, I then sort of, caught up and said, how's it going? And, I was assured sort of, we're still plans, we're still going to be on track. Then it came September, October, and that's when I sort of thought, you know what, I have to let them know that it's super important that we get this capital raising, or at least the first part of it, done by the end of the year, right? And so effectively they, had the conversation, all was fine. Then it came November, and, I was really freaking out at this point. So interesting for me, and what I thought was odd was that anytime I'd speak about the capital raise, I'd be speaking to a junior on the team, not the main person that actually sits on my board. So at the start of the year, I was expecting that $6 million was going to be raised, right? So I asked the question to everyone, put in the chat, out of that $6 million, how much do you think was raised out of that $6 million? Put your answers in the chat. Let's see what answers people come up with. Right, 500K, a million, yep, 500, 200K, 500. All right. So the total amount that was raised was 100K. And this put me in a hard spot because now I had to put 100K myself into the business to make sure, because the December, January period as a B2B business is typically the worst time of year for us, right? So effectively that was my sort of reality and it was at that point that I basically made the promise to myself that I'll never put the confidence of my capital raise into someone else. I would actually go and understand what is the science and what is the art around raising capital. So in early next year, I basically turned on a capital raise. And then effectively what I learned, and this same, basically had this same sort of board member said, what you need to do is you need to launch the capital raise and then give everyone a short time frame to participate and talk about how much demand there is for it. Right. And I realize this is a common investment banking strategy. It's done with IPOs, it's done with book builds, it's done with everything, right? And it's a game of sort of manufacturing that sort of, that involvement. And what I learned, so basically I did their recommendation. And so I was going around and I was saying to everyone that, so I launched the capital raise, and then I was telling all my first investor meetings that we're basically going to be, the round was going to be closing in 2 weeks. And so all I heard from every investor I spoke to was, that's too soon, that's too soon, that's too soon, that's too soon. And so pretty much I'd burnt through the first batch of inbound inquiries that actually had come in, looking to learn about the opportunity. And that was a massive lesson for me. And then I went and spoke to another board member and I asked them, in your experience, how many times have you seen a capital raise go from start to finish within a 3-month period? And I remember him just looking up, accessing his memories, just going through his different deals, because he's the most honest investment banker I've ever come across. And he just went, none. And so that was really telling for me. So then I spent more time sort of diving into what is this actual process. So the reality is that when you go into a capital raise, effectively it's a struggle to access investors. And then in that struggle to access investors, a significant amount of time is lost. And then ultimately it becomes a distraction from your actual core business. And I remember for me in that capital raise, I remember the amount of capital I raised, in that time, I think it was across like a 3 month period. I remember reflecting on it thinking, I literally had a similar dent in my revenue as to what I'd actually raised from a capital perspective. I thought that's just crazy. So effectively, I knew that, and you had to change the process, and I had to think about the actual capital raise different, the way I actually set it up. Because I'm so, by the way, what was odd for me is I'd been promoting companies' capital raises for 10 years, but I would only focus on the investor attraction part. This wasn't about the entire start to finish process. So it was important for me. And the truth was, my journey in going through that was, it was just it was an absolute wild emotional ride. And I realize is that when you have an investor that says no, you feel like you're this big, right? When you have an investor that says yes, you feel like you're bulletproof. So you do go through this emotional journey. And I thought it was just me going through it. But when I started opening up to other founders that were raising money, I realized that we were all going through it. The reality was we were just putting on our CEO face where everything is okay and we're not, everything is good while we're dealing with, all the other stuff that we deal with. So, to me, these were fundamental things where I thought I have to really start this education process. And in my learnings, when I went through this process and said I've done several rounds now, I've raised significant amounts of money for wholesale investor in that time. I think it's about 8 million now that I've raised for wholesale investor. Basically, I realized that the challenge is not just more investors, right? Effectively, and I say that because I would often have companies ringing up and going, look, we want to do a 5 million raise. We want minimum ticket size of 500K, and we're looking to close the round in sort of 2 to 3 months. And I'll just be like, good luck. I don't think I can help you. All the best with that, because that's just not the reality. So what I wanted to highlight sort of in educating is that, when founders move beyond their immediate network, the dynamics of the entire relationship changes. And I'll show you a slide on what that looks like next. Also, it was important for me after doing this capital raise over a couple of years, it is not about the single transaction. It's about building a process of trust and also sustained engagement with potential investors and also your existing investors as well. And that can also not be difficult when you go through periods like you've been through for the last 3 years and you're cutting team members, you're shutting down offices, reducing headcounts, you've got negative news to go out, all that sort of stuff, is what we've all been through in the last few years, unless you're sort of doing your round now, or you've just sort of started the business. And the other part that I understood was that investors often fund solutions to problems that they understand personally. So when I do my capital raising masterclass, you'll know I actually put a video, and I did this at the peak when I was right in the zone of raising money. The first question I'll typically ask a potential investor is what do you understand about the problem I'm solving? And that was an important question because I found that I met with a family office one time, and I remember they looked across me and they just said, what is the actual problem you're solving? And I was just looking at them like, after being in business for 10 years, you might figure out that there is a problem I'm solving. And he says, well, if I want to raise capital, I just go to Goldman Sachs and they raise the money for me. And it was at that point I understood the difference between people that understand it. Now, they were a family office and they had those networks, right? But effectively, often what people are investing into is the human story behind the actual technology as well, or you solving the problem that they understand personally. So in this case, a single pitch rarely works, right? Because it's not about here's a pitch deck, I agree with it, I'm going to transfer money, right? Often they want to see the narrative unfold over time. And this is the part that people miss. Because we've got the urgency for capital and we've got the pressure for it, you see the bank balance going down, we've got pressure in different directions, we need capital. But from an investor's perspective, what they want is trust, relationship. They want to build the understanding of the business. They want to understand the narrative as it's actually unfolding, right? And then also what I learned, and this was my $500,000 mistake, was that what they want to understand is effectively the vision for what you're building. They want a more human story because here is what we're building, not the technical debrief of all the product aspect. And this is in a first meeting, right? Now, there may be some investors that do want to go deep in the weeds on the technical side. That is a rarity compared to the majority of sort of family offices and high net worths that you'll come across. for me, I had a 2-hour lunch with a potential investor who was looking to invest 500K. And effectively at the end of it, he says, really love your enthusiasm for the product, love the detail that you go into. I just want to let you know that I won't be investing because I don't actually understand the vision and direction of where you're going. Like, what does this look like at the end? And that was really humbling for me. So that's why I share these as a story. And the last thing I'll say is if you're a technical founder, if you get to the point where you start saying, I'm not going to explain it to them, if they don't understand what I'm doing, I'm not going to explain it to them, you've basically lost the game. Because your job is to make it easy to understand what you are building. That is effectively our job, to get people engaged in our story and what we're doing, right? So then that brings back to the question, and this is when I went through my own process, and this was when the light bulb went on for me, is like, what is actually a capital raising? Well, a capital raising is fundamentally just a marketing and sales process. The marketing process is to build the funnel. The sales process is to convert from being a potential investor to an investor, right? That simple understanding removed a lot of the emotion for me and helped me understand that my business was a product, and effectively they were deciding if they wanted to buy my product. Right now, I know it sounds crude when I say it like that because we spend 24/7 building our business, but that is the reality from their perspective. And it's their belief if our product will help them get the outcomes that they want, which is obviously often a return on their investment. So the other part is that I learned in the process that if you're rebuilding your capital raising from the start every single time, it is incredibly time consuming, right? And it feels like a long drawn out process. But if you've got everything ready, being agile with your capital raise can make a substantial difference. And that's when we started forming the principles of get ready, stay ready, always be raising, and then get to the fastest yes or no. So getting ready just means you're basically ready to raise capital at any time. Staying ready is having everything up to date, right? And by the way, it's so much easier to keep things up to date than it is to start everything from scratch. The next part is always be raising and engaging. Now, that doesn't mean you're always taking money into the company, right? But if you've seen a lot of the capital raise the AI companies are doing, some of them have done 3, 4, 5, 6 rounds this year, right? They've raised a lot of money, some of these companies, right? But what it means is you're always engaging with investors because often they have great insights about what they're observing. And you got to understand, investors have a helicopter view of what's going on. You're deep in the trenches of your space, building your business, etc. And those insights can be helpful. And the other thing I'll highlight, a quick no is far better than a long drawn out no. Now, what I'm about to show, you can do this by yourself. It's obviously going to take a bit more time than if it's sort of seamless and in one product. But the reality is the principles of what I'm about to show you are the same. Effectively for me, and I'll talk about emergence at the end, but I built basically a 4-step engagement process in going through a capital raising process because I realized the first stage of the capital raising is you must build your profile. You must go from unknown to known. Your job at this stage is about manufacturing serendipity. So this is we're participating in different events. We're putting out announcements about what we're doing. We're communicating things on LinkedIn. We're doing all sorts of things to build our presence, to our actual ecosystem. For me, obviously, we built that inside Capital HQ so we can actually do that. From a promotional perspective, basically what we focused on was obviously we built our own investor ecosystem. We had our own investor ecosystem that we could go out to. But over 16 years of building a relationship, building engagement, etc., it made it so much easier, for me to go out to a network of people that are already observing what we're actually doing. So first part's profiling, second part's promotion. The third part is presentation. At some stage, you will need to do a presentation. And by the way, the promotion is to get people registering interest. I come from a marketing background. So for me, rather than doing cold outreach, I prefer people to register interest in what we're doing, right? Because then I know they're at least semi-warm, right, from a conversational perspective, or at least have some level of interest in what we're doing, right? Now, does that mean competitors could register interest in what you're doing, as you go through this process? Of course, but they also could become your shareholders or potential acquirers. When I talk about doing a presentation, this could be like this, doing information sessions. It could be boardroom sessions, right? And we worked with a company that just did endless amounts of boardroom sessions for potential investors, right? It could be in a in a hotel room, it could be over lunch, it could be breakfast. At some stage, a presentation and engagement needs to be done. This is a contact sport. As much as we've invested in online, and as much as I've had investors that have invested in my business before I've actually met them in person, they've typically been to our events before, experienced something of what we've done in person. And then the last part is publishing of milestones and announcements. The mistake people make is they do so much work, in the promotion part and presenting typically one-on-one, that they forget about the publishing part. And that's an important part of this actual process. If you look into the psychological principles behind the mere exposure effect, people tend to develop a preference for things simply because they are familiar with them through repeated exposure. This happens to us, and we get this as consumers, right? If you think about the entire Meta and the entire the Google advertising experience, it's all about you clicked on a website and then you're being retargeted with those ads, or you've gone onto someone's page, whether it be LinkedIn, whether it be social media, and then all of a sudden you're getting repeats of you're getting their content over and over again. And you start to actually dive into that mere exposure effect. And this is important because the more often you encounter a stimulus, the more likely you're to like and trust it. This is advertising principles, marketing principles 101, right? So the mere exposure effect is a very important part of capital raising that I've literally never heard anyone else talk about, right? Everyone just talks about pitch deck, pitch deck, pitch deck, pitch deck. And it's an absolute load of crap. So to understand how this works is the 3 stages of an actual buying decision. The first stage is awareness, right? Where an investor becomes aware of your opportunity. The second stage is they consider your opportunity, right? They start engaging with you. The last stage is where the investor decides whether or not to participate. Most people jump from awareness to decision, right? They forget about the consideration part. The consideration part is the most important part when you're sort of looking to amplify that mere exposure effect in what you're doing, right? So there's a direct correlation between the relationship you have with an investor, right, and the timeline in which you've been engaging with them. And I basically, and by the way, this wasn't mine. This actually come from an investor that I had a meeting with where he explained to me how he thinks about his level of relationships, right? Being that level 1 is a new contact. Level 2 is someone that's aware of you. 3 is a long-term observer and sort of be engaging with you for a period of time. 4 is the referral by someone who has made money with you, right? And the last one is basically a 10-year plus relationship where you've actually directly made money together, right? This is the trust aspect of, of relationships. And effectively there's a time aspect to that. Now, there is a way to build up the speed in that, and it's about being able to go from unknown to known via your capital raising brand elements, right? Now, your capital raising brand elements, sort of, I mentioned to people, it's, and this is typically how we curate opportunities for wholesale investor. It's been able to clearly articulate the team's been there, done that experience. Have they built businesses before? Have they exited businesses? Have they worked in high scaling companies? Right? You see this in every media announcement you see about a capital raising. You see about who the founders previously worked for, what they've previously been successful at. Like I saw something about the founder of Ed Rollo and his new business, right? But the connection was they went straight to what his previous success was to help that unknown to known connection, right? Other elements can include who's invested into your company. If they're high profile, private, high net worth or high profile investment groups, etc., these elements are helpful for people to understand because effectively what it's doing, it's looking for layers of social proof from an investment perspective. The next one is your sector. If you're in a growth sector and a fast rising sector that an investor understands, that's also helpful for them because in their brains, they understand that this is a growth area, right? The fourth one is your clients. So if you're a B2C business, it's all around your traction metrics that you're getting with your clients. If you're a B2B business, it could be your blue chip or well-known clients in your sector, because you would have been through some sort of procurement process with those potential investors, and basically they ended up buying, sorry, with those companies, and they ended up buying your product. So it's social proofed your product, right? And then the last one is for the technical companies is if you've received some form of government grant, that's also helpful as well, because you would have gone through a strong technical due diligence process to actually receive that grant. Pretty much the foundations for our curation process in how we curate companies that are relevant, for our conferences and for our services. Now, the why behind what we do, and I'll sort of just talk a bit about sort of our motivation in building our product, is because it is it is an emotional process. And so that's why we include education in what we do and all the other things. But also I built this product out of my own frustrations around raising capital, right? Because I thought if I'm going to go all in on this as an area, I want everyone to understand the realities of what it is when you're raising capital, and also to know the real things to know that what they're experiencing is completely normal, right? So effectively with Capital HQ, it is your command center from the capital raising perspective. So as I mentioned, the frustrations earlier were accessing investors, the time it takes, and then the distraction from the core business. What we decided to do was build that actually into the product. And the way I did it was I was raising money, building the product at the same time, and able to build in features into the product that solved the problems that I was having, or that helped give me intelligence into what was actually happening inside the mind of the investor, and also into the capital raise as well. So the outcome is the way I thought about it more as capital engagement infrastructure is how I actually think about it, not capital raising platform. Because the engagement part ultimately leads to the actual capital raising, but as the most important part was I realized that all these things we built inside of it was about streamlining and simplifying the process for the investor. It was important that we answered the investors' questions before they asked them. It was important that they could see a track of news about what we had actually executed on since our last capital raise, or even over our journey, right? And then from my side, I wanted to see what was inside the mind of investors and get signals about who was most likely to invest. For me, I've got a specifically frequently asked question that if an investor clicks on that, there's a strong probability they're likely to become a shareholder. So what I'll do is I'll give you a short demo of Capital HQ, and then I'll sort of talk about how we actually structure things to basically achieve the outcomes that I was sort of highlighting beforehand.